So thank you so much, for taking the time today. I think we're running a little behind schedule, so we'll try to keep it slightly compact. I think the topic that we are covering is extremely interesting. I think as we've been seeing over the last few years, and I think Mr. Tyagarajan was also mentioning in his address, technology is evolving at a rate that of course we've got Moore's law, which says that technology will evolve exponentially, but I think we're surpassing that. Earlier we were just having a chat and I was talking about the fact that, look, in the late 90s, early 2000s, we had the internet come in and change. Of course, the internet came in earlier, but started changing the way we do business in that period. We had the smartphones coming in, we've had the Web 2 revolution, we've had the Web 3 revolution. The key thing that has been happening with that is the gap between each of these tech waves, as you may call it, has started reducing to an extent now that we have the next tech wave coming in before the previous one subsides. So we had your big data, AI, ML wave being a big thing actually pre-COVID, and if you actually discount the COVID and the post-COVID impact, you had blockchain coming in, and now you've got generative AI. That's the big thing. And you keep hearing about things like quantum computing, etc., right? And which means that we have to be prepared for the next tech revolution before the previous one is over. One of the other things that's obviously happened in all this evolution over the past 3 decades or so is that technology has moved from being a support function to becoming a mission critical function to now becoming core to businesses. You can't run any business without technology. And I think we have a great panel today, with a mix of companies that have already started investing in technologies, some of this emerging tech, along with others that are already that have already made it the core of their business. So before we kind of jump into the discussion, I'm going to leave it to the panelists to quickly give an introduction of themselves and give us an overview of how you've been adopting these emerging technologies to improve the way we look at business, especially from the CFO's perspective.
And thank you, first of all, for inviting us. Like how technology has evolved, the finance function has also evolved. Okay, and when I got into the first finance role, the role of finance was more about closing the books, preparing a monthly or a quarterly accounts and submitting it. And the head of finance used to be called as chief accountant of an organization. Now, I think the role of finance has evolved, and for the role of finance is no longer a preparation of books of accounts. It's more about partnering with business and ensuring that we drive decisions. We partner with business to make sure that we allocate resources appropriately. It could be a capital resources. It could be relating to operational related decisions. So the function has evolved. For all of us in finance to be successful, it's important for us to leverage the technology. Okay, and there's no one way of doing it. And as Sandeep just now mentioned, that how technology has evolved in 80s, 90s, and in the last 20 years or so. So therefore, what we thought was the latest technology a year back on, say, on blockchain, not many people talk about blockchain now. A lot of people talk about AI, Gen AI, and I'm sure what is going to be permanent is a change as far as the technology is concerned. And it's up to us to see how to leverage and make use of it. So we are in tire or auto ancillary business. So we manufacture and sell tires to original equipment manufacturers and people like you would be buying in the replacement market, and we also export. So it's very important for us to become competitive. And one of the competitive features which we think that will help us to hold or retain or increase our market share is to how we leverage technology. So there are multiple areas, like how can we use technology to make a difference to customers? How can we use technology to improve operating efficiencies and things like that? And any changes in the technology, and how do we leverage that and make it relevant for us so that it makes a big difference to the customer in terms of experience. That's why I would like to start my introduction. Thank you.
So thanks. That was insightful, Satish.
Thank you. Good afternoon, everybody, and thanks for this opportunity to be here to present my views. Largely, my career has revolved around the banking and financial services space. Almost 28 years been into this industry. And I just wanted to resonate with what Mr. Kumar was just saying, that at the early part of the career, technology means if there are computers on the desk, it means that, yes, we are technology, everything is done through computers. But that was an era where physical ledgers existed, and as Mr. Tyagarajan was saying, that days and weeks will just go, or months will go in just closing the books. Today, as Mr. Kumar said, the role of finance has completely evolved in terms of course, there are some things which do not change, that closing the books and coming out with financials, of course, that do remain as a core function for finance. But at the same time, what is important, and from a bank perspective, is something called business finance, where we are able to partner with business and try to help the business achieve their goals by giving the right metrics so that they understand the business well. Coming to the theme of the conference in terms of data-driven analytics and all that, I'll just touch upon, say, 2 areas which are very important from a banking perspective, or finance to be specific, or 3 areas. One, I call it as a product analytics. Second, I call it as a customer analytics. And third, I call it as a people analytics. Product analytics, as a bank, any bank will have a plethora of products. And today, every product that a bank is offering to the customer is competing with each other in terms of the return metrics. Every product, it has its own various characteristics. And as you all know that as the banks grow, it consumes capital, and it requires to maintain a minimum amount of capital as per the regulations. So the more the bank grows, it always requires capital. Unlike any other manufacturing company, it doesn't have that kind of a capital adequacy kind of norms. So when we are launching products, or when they are giving returns, it is very important to analyze very carefully as to what is the risk-adjusted return of that individual product, and is it beneficial for the company, or whether we should slow down on some other products. When I'm talking about, say, customer analytics, it is very important that every bank acquires thousands and lakhs of customers on a yearly basis, and to understand that what is the customer journey that we are having, when does a customer become profitable, what kind of cross-sell opportunities are possible, what kind of campaigns should be done for which kind of customer, what is the effectiveness of these campaigns. Third, I talked about is the people analytics. As banks grow, the number of people in the bank also grow. Many banks have thousands of people working from them as they expand their branches. What is the productivity? When we talk about productivity, people talk only about frontline productivity, or in terms of what is the frontline delivering, how many sales he has done, how many products he has sold. But productivity is actually encompassing the entire ecosystem. Every function is important to see the productivity. Coming back to, if I have to do, or a finance function has to deliver these 3 different agendas, technology is absolutely important and a core part of the function. Today, the skill sets that we are looking for in finance is not the one who will sit on Excel sheets, deal with tons and tons of data, and come out with some actionable insights. But today, technology helps us in deriving or concise information, or what is the right set of data that is required, and to derive the actionable insights. So just to summarize, of course, technology is the core behind whatever we do in finance, but ultimately, these are the things that finance has evolved over a period of time. Thanks.
Thanks. So I think, very interesting point about the fact that earlier computers on a desk was considered to be technology readiness. I think we'll move to Sandeep.
Yeah. Thanks, first of all, Businessworld to invite me. For me, like data is what we say is the oil, but in my view, the analysis is the refinery. If we don't use the data in a manner which can give the insight, we can't get anything. I will just give an example. Suppose we are in the mining company and our products are being traded in the London Metal Exchange. So if I see just 5-year data and see the prices are going down for me, but if I don't correlate what is actually happening in the external world, I will be taking the wrong decision. So for me, the analysis is very critical. It is like having a car without the fuel. So data is a fuel, but analysis is the actually core engine for me. We also get a lot of data. In case of mining, we are the second largest producer in the zinc globally, and the silver 5th globally. For us, it's very important to have a productivity at very high. Given that in the mining company, many of the people believe that it's just like taking the ore out of it and convert it into metal. It's not that easy. It's like taking the ores, getting the ore, geotechnical technologies are there, but at the same time, money matters. So for our job in the mining company as a CFO, wherever the money is getting involved, I have to get involved. So even one diamond drilling happens, it costs crores of rupees. So what is the data coming? What is the analysis going from the last 5 years, 10 years? Success rates are there. So all these things, as a business finance, we have to also look into whether the exploration where at the area we are doing, what has been the trend in the past, through agency through which we are getting, whether that agency has been having the trend of the success in the past. All these come through the data. In our industry, we have like a kind of very large fleet of the equipments, which are like 60 tonner, 800 tonners, which are called jumbos. And the productivity plays a very big role, because running of that equipment underground 1 kilometer have a lot of fuel and ventilation and other requirements. So we keep a Power BI dashboards, which we developed around a year back, along with some external agency. And that gives the complete equipment-wise analysis, how much diesel has been consumed, how much power it has been consuming, how much output it has been giving, what is the benchmark, and accordingly any action which we have to take against that equipment, that it may be because of some OEM, it may be because of specific to the driver or operator who is running that equipment, where it is going. So wherever the ideal situation should be there, so that kind of analysis has been doing, and we are getting really good results. And technology only has helped us, because it's not humanly possible to input the data. Second example is like in case of mines, seismic events keep on happening. And that also costs us a lot if the production doesn't happen. So again, it boils down to money. So we have implemented a technology from the Australia, where in a proactively it gives that this is the area where some kind of seismic activity can happen. So earlier we used to evacuate the whole area of the mine. Now with that equipments getting installed, sensors getting installed, we are only leaving like, okay, 5 meter, 10 meters is the area where you have to evacuate, other area will keep on mining. So that is the power of the technology, AI, whatever we keep on talking. And similarly, third is for the safety is the most important for us. It is not humanly possible to give all the physical training to the 26,000 people. It can be a classroom. But what in company we have developed the technology, like there is one equipment, and without opening that equipment, the person can see, it's like X-ray machine. You can see what are the nut and bolts in that equipment, and we have implemented through the Google AI that technology, so but somebody can just see what is within the equipment, which is the confined area where we should get into. It is so all these technology have helped us reduce the time in the trainings, improve the productivity, and because any safety incident in our kind of industry, let's just stopping the production. So that again boils down the money. So I get very much involved, and my business team get very much involved into wherever the money matters. So that's all in the what we see the data as well as the analysis.
Sure, thanks Sandeep. So I think very interesting, right? You would least expect a mining company to be that deep into tech. I think we'll leave it to Nilesh to.
Hi, good afternoon everyone. So I come from a microfinance industry, and okay, am I audible? Yeah. So hi everyone, good afternoon. I come from microfinance industry, and being in financial inclusion space, we always have believed that technology is a key enabler, because we have to largely work with customers who will have a relatively low digital as well as financial literacy. At the same time, we'll be having a large workforce which will be operating from the rural markets. So that is where today, to give you a perspective, technology, I mean, we being a NBFC microfinance institution, in 2015, much ahead of time, we had implemented our core banking solution. The purpose behind doing this was that since the customer is not equipped to analyze, to understand the financial products, it is the onus is on us to offer them customized solutions and make the life easier for them. So today the robust tech stack is allowing us to operate seamlessly across 1800 plus branches across 16 states, more than 360 districts, with more than 19,000 workforce. From a finance perspective, managing the reconciliations on daily basis it's very important in this business. We still largely operate on cash-based collections. So almost 97% of our collections is in cash. And by today, 12 o'clock, we have already collected, we have completed our daily collections, which is in the range of 60 to 70 crores. And there is a real-time dashboarding which kind of helps both the business as well as the finance to track the daily collections, disbursements on a more frequent basis. A year back, we used to report our quarterly numbers after 45 days. Now we have brought it down to within a month, and our MD is kind of aspiring to bring it down to the first 15 days after the closure of the quarter. So this is possible because of the robust tech stack that we have built. And going forward, we believe that data analytics and artificial intelligence will play a greater role as we kind of deep dive and further penetrate in the financial inclusion space. Here today we see that when we go in the rural markets, the credit penetration is still at 10 to 15%. I mean the formal credit penetration. So when we are targeting new customers, we have to largely rely on softer information. We will have limited access to formal set of data. And that is where we believe that by leveraging the data what we have built over last several years with respect to household income or household leverage, credit bureau information, understanding the borrower's asset ownership patterns or spending patterns, and then also kind of leveraging various other data sources like SMS details or mobile app details or transaction details. So we believe that we can leverage all these data sets to one is fast track the customer onboarding process. Second is reduce the loan turnaround times by developing various customer profiles, business profiles, customer screens. So that is where we have also implemented a business rule engine, which has already started building various customer profiles which we can use for onboarding new customers in a shorter period of time. We are also working on leveraging analytics for personalization, wherein we can do targeted campaigns, product offerings for our customers. At the same time, there is an opportunity for predictive analytics to kind of imbibe that into our forecasting mechanisms, wherein we can identify potential default cases. And all this data will also help us in aligning with the changing regulatory environment, because in microfinance, being a microfinance company till now, we were working on a fixed pricing mechanism. However, last year, RBI has now changed the regulations wherein they have allowed us to do dynamic pricing, which will be based on the credit history of the customer, past repayment track record of the customer, and this will vary from market to market. So dynamic pricing will also be an outcome of leveraging the data going forward. So exciting times for us, and we believe that technology, while the customer segment has been less digital savvy, but we believe that over the next 5 years, we are anticipating a sea change in the digital adoption of our customers across the rural hinterlands.
So thanks, panelists, for those those insights. Let me actually pick up from what you were just saying, Nilesh. See, I think between you and Satish, I mean, you're in the same vertical, so to say, but in two very varying businesses, right? And like we were discussing earlier, a microfinance fintech-based company, for example, has to rely much more on generated data, because you're talking to unbanked people who they may not be that technology savvy, although everybody has a smartphone these days. Whereas for a bank, it's more about provided information. You can rely on on the credit bureaus, on customer histories, etc. So being mindful of time, in a couple of minutes, I'd kind of first ask you, Nilesh, and then Satish. Can you talk about how you're implementing technologies such as AI, blockchain, thinking about even stuff like quantum computing coming up to start leveraging better data or better opportunities?
So as a first step, as I said, we have implemented rule engine. As of now, the rule engine largely we have aligned it with our credit policy. However, going forward, as we are also working on data analytics, wherein will be implementing data marts, which will allow us to segregate information across multiple departments, multiple applications, and that is a starting step. So once the data analytics becomes richer, we will start imbibing that in the rule engine as well. And blockchain we are not largely using. It is more towards the distributed business setups. However, we do believe that there is a scope for artificial intelligence to work along with the analytics for better understanding the customer. So AI, we believe it will help us from transitioning from knowing your customer to understanding your customer. That is a transition we are working on, leveraging the AI over the coming years.
I think very interesting KYC to UYC, let's say.
So internally we call ourselves as a 102-year-old startup. So our bank is that way about 102 years old. Shape or the structure of the bank is undergoing a massive change in the last couple of years. And to that effect, very important to understand that technology is a differentiator today in terms of ability to offer the right product to the right customers. And if we do not, and to that effect, as Nilesh was mentioning, core banking, the latest core banking, I mean, there are hardly few choices in that. But the latest core banking is a key differentiator so that our ability to offer the right products or the right customer experience in terms of the app or the internet banking is very important today. Otherwise, all banks that way look very same in terms of the product offering. So we are, as a bank, investing significant amount of money on technology. Like we are in the process of implementing the latest core banking. Plus there are systems in bank which we call it as LOS and LMS for various businesses, for SME business, wholesale bank business, or for retail business. So we are implementing the latest LOS, LMS in the system, in the bank. From regulatory compliance perspective, as well as for analytics purposes, we are also implementing a good GL system. The other differentiator today many banks use is the Oracle OFSA, so we are implementing that as well. So as we even talk to analysts, what we say is that whatever is existing today, 3 years down the line, nothing will be there, including the email system has undergone a change in this bank. So I would say that we are in this journey where I wouldn't say that we will have much better technology than anybody in the market. Of course, I cannot say that. We are a very small bank at this stage. But at least we should be at par with the larger banks and what technology stack they are having. We should be having that stack so that we are offering the best-in-class customer service, best-in-class customer products. At the same time, we are able to leverage this technology for good analytics internally so that we are able to drive a profitable business.
All right, thank you. So I think, that makes a lot of sense, in terms of the fact that you need to have that kind of a tech stack which at least is on par with the market, if not ahead. So, let me kind of pull that now to the two more traditional business kind of companies like CEAT and Hindustan Zinc, right? So my question is that, look, of course, when we were discussing earlier, you said that you're scaling up and, Hindustan Zinc is, of course, implemented it to a greater extent, right? But in terms of building that culture, right? Because, your companies by nature, even the employees would not associate it with a, high technology company from a pure electronic tech perspective, right? Of course, there's tech in your businesses as well. First from you, and then, from you, Mr. Kumar, what is it that you're doing in order to make sure that technology becomes culture, given that, how technology is evolving in the future?
So I will partly not agree. It's a myth that manufacturing organizations are traditional, but at the same time, they have a nimbleness to startup.
No, I certainly agree. I'm just saying, I'm talking about perception, right?
Yeah, perception. It's a perception. So I will try to close that perception, correct the perception. If you see in finance, when I joined around 2.5 years back, Hindustan Zinc, I'm a part of Vedanta Group only, but still I keep roaming the organization. So there were a lot of Excels, reporting, everything used to come, 50 emails every day and all kind of thing. So we implemented a dashboard, it's called North Star, which is worked on the ClickSense model. And all the reports are integrated with the SAP into that. And there are certain set of people who have to get that kind of information. So no Excel is maintained on the reporting, even from the operation side, like it's called a DPR. In our environment, it's a DPR, daily production reporting. It does not come automatically when the ore come from in the truck from the mines 1 kilometer above on the surface. It has a sensor which takes the volume, and there is a bulk density automatically fed into the system, and automatically production booking happen. So that is the level of technology which we have went into. As far as finished goods is confirmed, it's a completely payment is linked with the SAP. So we don't report anything on the Excel, everything comes to the SAP, and a single source of truth is the SAP. Second is in terms of like a treasury, we handle almost 1 lakh crore rupees of treasury in both in the borrowing kind of thing. We implemented along with the IBS completely automated accounting. Like for the mutual funds, it may be very normal for the banks, but in the manufacturing kind of setup, we are one of the first people who have implemented such kind of thing, where we just the valuation from the CRISIL at the end of the month and got uploaded in the system, and automatically accounting entries are got passed. And you have to just review it. So these are the kind of technology we have done. You are right, from the operating person who is on the shop floor. For him, it is a change of the culture. But I think it's a journey. We have to keep educating them that you don't have to prepare in the Excel, because we will not have a repository in the thing. If they can put in the logbook, nobody can look at the analysis. And that's what it can also lead to a fraud or any risk other situation. I think I have to keep on educating the people. Even for the risk management, we are one of the few companies in the manufacturing sector in India who have put all the KRIs in the SAP. So in the SAP, nobody has done in the manufacturing setup such kind of thing. So along with the Deloitte, we partnered and launched the project Pragya, where all the risks are into there. And this is also like a geofencing kind of thing, where whatever the happening in the world which impact in my kind of business get triggered there, and the person has to see whether this can impact your function, this organization, and then somebody is to assess and see, okay, it doesn't impact, and close it. So such kind of level of the technology we have gone. Of course, it's like a cat and mouse. Whatever you will do, it will keep on doing new. Because when I joined as a trainee in the 2004, it used to be note sheet and people has to approve it. Then we moved into the SAP, then there was some automation, then the Ariba, then now we have gone to the Fiori app, then on the mobile we can approve it. Such kind of things are there, but I can assure you that in the manufacturing sector, also it is taken care well.
No, I'm sure it is. I think the idea is to make sure that the perception kind of internally does not remain. So I think we'll give the last word to Mr. Kumar here, and your thoughts on the same.
No, I think finance as a function can define how it wants to influence the business. I just want to give one example to narrate. Okay, I think technology is very relevant for a manufacturing industry as much as it is relevant for other industries. So in CEAT, we went in for a lighthouse certification program. Okay, and happy to share with you, in January, we were the first tire company in the world to be granted a lighthouse certificate in the Global World Economic Forum. And when we undertook this initiative, okay, we decided how to measure the success, or how to define the success. So is it that getting a certificate, lighthouse certification, is that the end game, or can we define it differently? And from finance functions point of view, we said, why not we take top 2 problems of the business and see whether technology can solve those 2 problems. For a tire industry, it's a very highly capital intensive industry, so you need to put a lot of capital. And 70% of our revenue is raw material costs. So these are 2 important things that we just wanted to understand whether technology can help in addressing these issues. So one of the KPI that we had agreed that Lighthouse should achieve, or a part of the Lighthouse certification should achieve, is that there should be a quantum improvement in the capital productivity of the factories, 1. And number 2, in the efficiency, on the efficiency side, can we ensure that input-output yield, scraps, claims come down with clear, very stiff targets. So at the end of the day, all finance professionals, we know what is measured is what is done. Okay, we decided to measure consistently on a regular basis and created that system, and technology helped us to understand as we got into details, and happy with the outcome. Of course, happy to get a lighthouse certificate, but more than that, we were very happy that we were able to address two of the problems. So therefore, finance can use technology in the financial processes side. As a partners, we could also see whether we could ensure that the business uses these technologies to solve some of the core problems. So therefore, it's relevant. As we got into details, we were able to identify more and more areas where we could leverage technology, okay, and solve those problems. That's what I want to say.
All right, I think great insights. Again, I think the interesting part of such a panel discussion is that, maybe 10, 15 years ago, we wouldn't have had a set of CFOs sitting on the stage talking about technology with that depth. So I think that's what's changing. So I think although we are out of time, but if anyone in the audience had any questions for our panel, we'll kind of, yes, the gentleman there. Can somebody give him a mic, please? If you could just put up your hand up so they'll just give you a mic.
Hi, good afternoon to you. My name is Tyagarajan, I'm from Vayana. My question is to the two bankers on the dais. Since you talked of technology stack and leveraging in technology, I would like to understand what are you doing to leverage technology for credit scoring as well as credit analytics?
Thanks for the question. So as of now, as I said, we have implemented the business rule engine. So business rule engine, basically it allows us to take the customer bureau data and kind of incorporate it along with our credit policy to generate our own score for a customer. So depending upon the history what the customer has built with us over several years, this internal scoring mechanism can help us to cross-sell various products to our good quality customers. So that is something what we are doing. It's about creating a green channel for our high quality customers and cross-selling them multiple products. So this is one thing what we have started. The larger part was what I was mentioning is that whether we talk about microfinance or whether we talk about the MSME space, where the credit penetration is very less and underwriting a customer is very difficult given the availability of, the limited availability of information. So this is where we believe that data analytics can help us to create various customer profiles, business profiles across various local markets, because you take any business, whether it's a dairy business or whether it's a tailoring business or whether it's any kind of local production activity, all these business profiles will keep varying from market to market. And the underwriting can be made faster if we have better understanding of the profile in a particular market, so that any new customer applications or loan applications what we are witnessing, we can underwrite it on a faster basis. So that is where we believe that earlier in MSME underwriting, the underwriting time was around more than a week, up to 2 weeks, but now in many cases it has fallen below a week and also in few days. So we believe this is where the data leveraging will help us.
Thank you so
Satish,
much.
you want to add something?
So especially for when you're dealing with SME or a wholesale banking kind of a customer, of course technology helps in getting the various data parameters so that we do the credit underwriting right before we, as a bank, we write a check. But just to reiterate my earlier point, that as a bank, we acquire thousands or lakhs of customers into our ecosystem. And we also have a credit card product and all that. So it is always important to capture as much information of the customer as much possible, because that becomes a repository for you to understand what is the customer base and what kind of campaigning we should do for cross-selling to that set of customers. So it is very important to create a good database of customers and leverage on that database so that you are able to cross-sell right set of products to the customers.
All right, thank you. I mean, we'd love to have more questions, but we're out of time. The panelists, are, of course, here, so you can reach out to them. But thank you so much for your time and sharing knowledge with us. That's what our community is all about. Thank you to panelists. If you could give them a big round of applause.